Back talking with Bob Shiller, founder and chief economist of the investment management firm Macro Markets. Hey, Bob, I want to ask you about the housing market. You had MGIC, the largest U.S. mortgage insurer, posting its ninth straight quarterly loss. They had a record number of homeowners failing to meet mortgage payments. You had data on record foreclosures yesterday. Where are we in this housing cycle?
Well, the remarkable thing is, despite what you just said, home prices are up. According to our S&P Case-Shiller indices, the home prices rose in our latest 3 reporting months by 3.6%, which is way above the seasonal. After having fallen, it's like the greatest turnaround in the housing market that we've ever seen.
Well, how do you explain that, then?
So I don't know what that means. What's that?
How do you explain it? Is it an aberration in your view? You guys track this data. How do you explain it, these increases in home prices?
Well, I'm trying to explain it. And you never know for sure when you're dealing with speculative markets. But I've been doing surveys. Chip Case and I also do questionnaire surveys of home buyers. And what we think happened, a change between 2008 and 2009, is that in 2008, people really had negative expectations. Homeowners very often, home buyers in 2008, would tell us that they're buying anyway, even though they think prices are going to fall. That has changed. The short-run expectations have improved quite dramatically. And I think it's all part of the general sense that the recession is over. So people don't feel that they have to wait anymore. But I don't know that this is the beginning of another bubble. That's probably putting too much onto it.
Well, and I know you talked to the Wall Street Journal, and you said that you see 5 years of stagnant home prices. So not a very good outlook, is it?
Well, that's what happened the last time. The last time that we had, in the 1980s, there was a bubble, and it burst in the early 90s, and then they didn't go up. They stayed level actually fell in real terms for about 5 years. So we don't know that history will repeat itself. But right now, the economy looks just as precarious, or I'd say much more so than it did in 1991. So I don't see any, it doesn't seem right. The markets, why are they going up so fast? It's a surprise. But you got to have some respect. These markets show a lot of momentum, and going up, it makes me worry. It makes me, I guess, be optimistic that this might be the beginning of another boom.
Well, talk about momentum. I, too, get a little bit worried when I look at the stock market run here. We've had quite a bounce. We all talked about Dow 10,000. You wrote a book called Irrational Exuberance. I'm just curious, when you look at the stock market right now, is that what we're seeing again in your view?
This is a really remarkable time. The turnaround we've seen in the market since March 9th is the sharpest turnaround that we've seen since the 1933, the Great Depression. And so it's something really big is at work. I think that maybe the simplest explanation is that we had a serious depression scare that came in, and somehow everything seemed like, maybe it came in with the stress tests coming out. That doesn't mark the exact bottom. But things like that started to happen. Right. And people just got optimistic. Their animal spirits came back.
Hey, Bob, just got 10 seconds, but are you calling this another bubble here when it comes to the stock market? Just quickly.
In the stock market?
Yeah.
Yeah. I think not. I don't know. But my idea is we're kind of bouncing around a resistance level. We're high. The market is highly priced. My price-earnings ratio is around 20 now. Right. It's okay to buy stocks, but don't expect a dramatic continuation of this.
All right. Good to get some time with you, Bob. Take care. Have a good weekend. Bob Shiller, everybody.